Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra, and with me today is Ekta Batra. Ekta, good afternoon. What a day, right? The surprise pause that has come by from the RBI as far as repo rate hike is concerned. Markets definitely are enthused.
Hi, Sonal. Yes, absolutely. It's a pause, not a pivot.
Yes.
That's the big headline which is coming from the Reserve Bank of India, and indicating that yes, this pause has taken place. It is because of global uncertainty, but it is only valid till the next RBI meet. There is no change in stance which has taken place as well. So it's more of a hawkish pause this time round from the Reserve Bank of India. We have a whole host of headlines to go through and companies to cover. Here are the top stories this afternoon. Stocks gain after the Reserve Bank of India leaves rates unchanged. Realty stocks lead gains, followed by industrials, while IT and FMCG drag.
If I have to characterize today's monetary policy in just one line, I would say as follows. It's a pause, not a pivot.
RBI pauses on interest rates hike even as it keeps its stance unchanged. Interest rate sensitives gain.
It's strong Q for growth, which powers up Cholamandalam Finance, while a transaction charge nod boosts IEX, but Nykaa slips on slowing growth in its fashion business, and DMart skids on a seasonally weak quarter.
RBI opens up another window for banks to meet the credit needs of small borrowers by allowing for UPI payments using bank credit. The move could up the competitive intensity in the microcredit segment. Okay, those are the top headlines. Of course, the big one is the fact that RBI has paused rates, at least paused for right now. They did not change the repo rate this time around and kept it unchanged, on the back of which we are seeing markets surge. The Nifty is up 57 points as we speak. The Bank Nifty is up 131, and the mid-cap side of things, they are outperforming. So it's a 0.7% uptick that we are seeing on the mid-cap index. Some of these rate sensitives, real estate stocks especially, those are higher in trade today. So we have something like a DLF, Prestige Estates, Puravankara, all of them up and away. Nifty Realty is the top gainer, up 3% in trade. So good going for the market, and also we have a long weekend coming up ahead.
Yes, Sonal. Well, you know, multiple holidays, so that's the benefit of at least April going into 1st May, and after that, don't forget that we do have earnings season and a whole host of cues to continue to track. But let's welcome Himen Kapadia of KR Choksi Securities, who's joining in for a technical check on the markets. Himen, hi, welcome to the show. Well, it seems as though the markets are in fine fettle. We've seen the FIIs buy in the cash market as well, and the Reserve Bank of India has now paused. So one is hoping that the inflation figures will probably help assuage concerns going forward, and the RBI would continue with that stance. But nonetheless, based on the technicals of the market, are you seeing further strength? How would you approach it, considering today is the last day of the week?
A very good afternoon, Ekta. Thank you for having me on the show. Like you said, maybe the markets could be a bit subdued. Not subdued, I mean, the market actually doesn't show that, but it doesn't reflect that. But yeah, participation could be just a little bit on the wane because of a long weekend coming in. Like you mentioned, I think RBI governor provided a pleasant surprise. The VIX has been consistently volatility index below 13 for some time now. You know, we had a spike up in the market, went to 16,850, we gone to 17.5, 18. The US VIX had also gone to 31. VIX has cooled off over there. The VIX has cooled off over here also. So I think that is a major point for bulls. And secondly, we were in this range between 16,850 on the downside, 17,200 on the upside. And we were in this range for almost a couple of weeks. So frankly speaking, now we've sort of broken out of this range, and broken out and how we sort of made a fabulous move. The thing is, now we are getting close to resistance levels. So this would be a slightly important phase in the near term, in the sense we could just walk into resistance. I mean, we walked into resistance levels. 17,613 is a resistance level as far as the Nifty is concerned. And if I were to look at corresponding levels for the Bank Nifty, yeah, we're almost there. So frankly speaking, time being, we might just take a breather, which would be actually good for the market. On the hourly charts, we look a tad bit overbought. So everything seems to suggest, keeping the long weekend in mind also, Ekta, we might just take a breather.
Okay, we might take a breather. But Hemant, in a market like this, what would your individual bets be?
Well, frankly speaking, there is no choice, Sonal. You have to buy. Ideally on a decline, but yeah. Firstly, favorite pick would be Reliance. I mean, sentiment-wise, weighted-wise, Reliance is in the industry itself. This whole move where the market has turned direction is entirely because Reliance has turned. So I would go with Reliance first. We're at 23.40. It would be a conditional buy call because 3 days we've been range bound over here, Sonal. So I would prefer to buy Reliance at around 23.30, around 10 rupees lower. A stop loss of 22.80, a target of 24.30. So risk reward ratio 1:2, 50 rupees stop loss, 100 rupee target. Reliance looks good. It's a modest target. I feel Reliance should go past 2,500 in the current month itself. So the other stock is a buy call on Ambuja Cements. Looks good. Higher tops, higher bottoms almost coming in. Indicators have given crossover buy on the daily chart. Even the weekly charts are looking promising. So one can buy Ambuja at 385. Stop loss 375. Stop loss 370. Target of 415. This reward ratio 1:2. So.
Okay, all right, Hemant, we're going to let you go on that note. Thanks very much for joining in and giving us all of your technical cues, and wish you a good weekend as well. Well, let's move forward onto our segment Midcap Movers. Vivek Iyer is here to tell us all of the buzzing broader market stocks in today's trading session. Vivek.
Well, thank you so much for that. And yes, it is quite an optimistic screen, a green screen. If you can look at, most of the mid-cap stocks are doing very well. And especially when you're talking about the breadth, the market breadth is very strong. Select stocks that we are picking out today, IEX, while the company gave its volume update and its transaction update in terms of, FY23, what's actually aided the up move as far as the stock is concerned is the fact that there is a CERC update, an order which says that the companies that are in the power exchange space can continue to go ahead and levy a 2 paise per transaction charge, and that clearly has removed an overhang, and the stock is up 10% in today's trading session. Barbecue Nation up almost 15% on very strong volumes. Carousel India, now this particular stock on the back of a domestic brokerage initiating coverage in today, we are actually seeing the stock move up on good volumes as well. On the other hand, some of the stocks where you're actually seeing volume action up almost 3 to 4 times the typical 5-day to 10-day average. Aptech, after a while, is up almost 6% in the session today. Indocount Industries and TVS Electronics, this stock is moving up on very strong volumes. On the other hand, after a period of sustained outperformance, Varun Beverages today takes a bit of a breather. Nykaa, 2 days of gains, but today down 3% once again. And Shoppers Stop underperforming in today's trading session.
All right, Vivek, thank you so much for joining us. So that's all the update from the broader markets. For now, we'll slip into a short break. And up next, we'll be joined by Manoj Gaur, who's the chairman at Gaur's Group, and Samantak Das of JLL India to discuss the impact of RBI's rate hike pause that we've seen today. They've kept it unchanged on the real estate sector. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, we are seeing real estate stocks gaining and buzzing in trade. Nifty Realty is up 3%. This is as RBI has kept the rates unchanged for this particular policy. And that's the reason why all these stocks are doing so well in trade today. Manoj Gaur, president of CREDAI NCR, and also the chairman of Gaur's Group, and also Mr. Samantak Das, the head research and REIS at JLL India, joining us now to discuss what this really means for the real estate sector. Gentlemen, thank you so much for joining us here on CNBC-TV18. Mr. Das, let me come across to you first up. Can you tell us how big of a relief it is? Because so far we've been speaking to listed developers at least. They said not much of an impact of all the rate hikes that have gone through so far. But it was one of the segment, that's the affordable segment, which was seeing some impact. Do you think this particular pause, the change that hasn't happened, will bring back the demand or at least keep it stable?
Hi. First of all, thank you very much for calling me on this show. Definitely, this move of a status quo maintaining the repo rate is a big relief, at least for the short term. The simple reason is for the last 1 year, what we have seen is 4 to 12% increase in price. And just keep in mind that this is not a full transmission of the cost of construction to the buyers. So partial transmission, but still it's 4 to 12% increase in price. That's number one. Number two, very important is the repo rate has gone up, as you know, by 250 pips from April 2022, so last 1 year. As a result, the EMI overall has gone up to the extent of 70 to 20%. It's a big number. So to that extent, I would say that this repo rate, keeping it constant for the time being, is a good relief for the buyers, as well as for all the stakeholders, particularly the builders, because we have seen a robust growth in terms of sales for the last 1 year. And the growth is to the extent of 20% year on year till March 2023. So that's really a robust growth, equally supported by a 25% growth in supply, new launches. So the market is quite robust. And we believe very strongly that this pause in repo rate will really help the market to maintain this growth trajectory in the coming quarters.
Okay. Mr. Gaur, welcome to the show. You know, one of the reasons pointed out by the Reserve Bank of India of this, in fact, being only a pause and not a pivot is because inflation continues to be a concern. We've seen inflation above 6% for 2 consecutive months. There's a possibility that it could possibly soften, but it's still not in the Reserve Bank of India's target zone. I just wanted to extend that conversation in terms of what's taking place when it comes to inflation within the real estate space. What is the kind of inflation that you're facing when it comes to input costs, and how much can you probably pass on right now?
I am fully agree that pass on is not possible. The inflation in every material is there, and especially after the input credit goes on. The entire burden of the GST is on the real estate, especially the real estate for the affordable housing and the mid housing. The cost of construction is significantly increased due to this unavailability of the input credit. Now, last continuously 6 times, around 250 basis point is increased. That increased the our interest on the loans and increased the EMI. I think it's a good move to put it on the pause, and I think from this onward, it is market के ऊपर जो है ये मेरा कहना है कि आपके इसके ऊपर अभी जो market का जो control था वो अभी तक तो ठीक था, अभी तक home buyers और developers इसको कर रहे थे, और हमारी request भी क्रेडाई national also requested the RBI to put it on the pause. Because now the home loan is around 9%. Beyond that, the sales or market अभी जो real estate एक अच्छे segment में चल रहा है, I think इसको ये इस तरह का step की जो है बहुत जरूरत थी, और we welcome this step of RBI.
Okay, so most of the industry body players are saying that they had requested RBI to not change rates further or increase them further because it was impacting demand. Mr. Das, that takes me to the next question, and that's about the luxury segment, because what we saw with DLF saying that one of their, one of their projects where apartments were priced more than 7 crore rupees, they just got sold over in a weekend. But then we saw this new amendment come by in the budget where there was a cap on the capital gains advantage that you can take. With this, what do you expect segmental performance to be like? Come April, we have this new tax rule. We have now this change in rates, or no change in rates, so to say. What do you see as a demand driver for both affordable and premium, or do you expect it to continue?
See, if I analyze the sales for this quarter, the recent quarters, January to March, it's very, very clear that this sales growth is more or less across all the segments. You know, affordable, of course, it's the most, the voluminous market, to mid segment, premium and luxury. Even premium and luxury, if you see, the share has gone up quite significantly in the sales as well as in the launches. So both demand and supply, the premium and luxury has gone up. As you said rightly, probably the the budget provision of restricting the benefits after March really helped push the premium and luxury more. My opinion is India is a market wherein you have the major demand coming from the mid and affordable housing. That will really definitely take the focus point of sales, if you ask me, because anyway, your premium and luxury is not even probably 5% of the total sales across pan-India or the top 7 cities in India that we analyze. So my opinion is this pause will impact definitely the affordable segment, the mid segment, and mid segment is a very, very sensitive segment because this is quite big in terms of number of home buyers, and the benefit is not so much because affordable you have a lot of government push, but mid segment is in the hands of the market forces. So the buyers in that segment will really benefit from this interest rate pause. So that's my view on this.
Okay, Mr. Gaur, can you leave us with an assessment on what the growth might look like in FY24, given that there's a pause currently? That's definitely a positive for the mid-income segment. But on the other hand, we do have signs of, a possibility of a slowdown. There's some uncertainty which is taking place with regards to the global banking environment at this point. So given all of this and putting everything into context, what is the assessment of growth in FY24 versus what we saw in FY23? If you could put some numbers to it.
Actually, after COVID, the entire perception towards the real estate has changed. Now the maximum is demand from the end user or the user, they want to upgrade their houses. So I think in coming future, the demand will be there. And last year was very good. The robust demand was there, and the numbers is much higher than the pre-COVID session आप कह सकते हैं. और आगे आने वाले टाइम में I think it's around is FY23 के अंदर around 10 to 15% or up to 20% growth will be there. एक दूसरा कारण भी है growth होने का कि new launches are very less. After this all RERA and demonetization and the past 6 years जो real estate ने के ऊपर जो इतना प्रेशर रहा है उसकी वजह से न्यू लॉन्चेस अभी जितने भी डेवलपर है वेरी कॉन्शियस हो गए और कम लॉन्चेस आ रहे हैं. तो एक डिमांड एंड सप्लाई का गैप अभी भी जो है बना हुआ है. उसकी वजह से डिमांड जो है इसकी रोबस्ट रहेगी और बड़े हाउसेस की डिमांड स्टिल अभी भी बनी हुई है.
Okay. All right, Mr. Gaur, Mr. Das, it was a pleasure speaking with you. Thank you so much for joining us and taking us through what this decision means for the real estate industry. So, lower inventory, lesser launches, growth is expected to be better because of this pause that has come by, especially for the mid-income housing segment. We'll slip into a short break now and get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Welcome back. Well, let's talk about a couple of more companies in focus. Macrotech is the one that we're talking about. Sonal, tell us about the Q4 update.
Well, it was a decent update, a 12% decline on a YOY basis, but Ekta, that has come on a very high base. Remember, Q4 of last year, it was a record high number for Macrotech in terms of pre-sales, and this time around on a quarter-on-quarter basis, it's a flat performance. But if we look at what they did in terms of guidance, they have surpassed their FY23 pre-sales guidance, and they've met their debt reduction guidance at 7,000 crore rupees. Quickly running you through the numbers. Pre-sales, they were lower by 12%, but collections were higher this time around, coming in at 2,933 crore rupees. The net debt of the company this time around has come in at 7,071 crore rupees, which compares with 9,300 crore rupees that they saw last year. So this time around in FY23, their sales are up higher than their guided number of 11,500 crore rupees. Collections more than 10,500 crore rupees, and net debt, as I earlier said, it has reduced to the levels that they had expected earlier at 7,071 crore rupees. Now, company says that they witnessed addition of 12 new projects having 14 million square feet of saleable area. This is just in Q4 for the company, and they had guided for a gross development value of 15,000 crore rupees. They have surpassed that as well. 19,800 crore rupees is what the developed value looks like as on FY24. So good update, and of course the added benefit of this unchanged repo rate definitely is something which is positive for the company.
Okay, all right, Sonal. Thanks very much for that. So that's on Macrotech Developers. Well, on that note, we also have to wrap up the show, but here is some important information for our viewers. News 18 Network and Harpic have been mobilizing the country for sustainable sanitation and clean water with the mission Swachhta Aur Pani. And we are launching season 3 of this nationwide campaign on the occasion of World Health Day tomorrow to raise awareness on the critical linkage between proper sanitation, clean toilets, and good health. Don't miss it.